Hey, it's Jack from Alpha Charts with a state of the market video. Today is January 21st, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. Now, I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Please like and subscribe to my YouTube channel. It's free, and again, having likes and subscribes keeps me doing this. So thank you very much. And I'm on Twitter at AlphaCharts365. If you haven't caught me there, I'm posting stuff all week long. So definitely check out my Twitter page, feed, whatever you want to call it, at AlphaCharts365. Okay, markets. So trend line that everybody has on their charts still is in force. Price is still below it. And you see we had 6 touches of it so far, and it's been rejected every time. But notice how it's becoming more frequently the touches versus up here, right? The more times we test it, the more likely it is to break. We have this declining 200-day moving average, which is price just is, it's right there. It's right at it, right? It's a tiny bit above it. But more importantly, this dotted line right here is 200 candles ago, right? So as we take out this data and eventually this data, which is, 2 more weeks, right? We're going to start to, come into this area right there. So we're talking about like first, second week of February or so. We'll start to clear out this data. If price can stay even in this range for another week or two, or potentially even start to break out of the trend line, this 200-day moving average is going to start to flatten out. Again, things that you see in a recovering market. The short-term moving averages are all bunched up together, and they held where they had to. So Thursday was a pretty nasty looking day, but look how price roared back the next day. To me, this is very bullish action. That's just the way I see it. Also, on the bigger picture, not a classical type of inverse head and shoulders, but you could definitely see shoulder, head, shoulder, and maybe an inverse head and shoulders within this shoulder itself. And I really don't care if somebody says the neckline has to be horizontal or whatever. I don't care. The point is, to me, this looks more like bottoming action than anything else, right? It doesn't look like distribution to me or anything like that. To me, this looks like bottoming action. Now, I'm also in the camp that we could be bottoming here, move higher, make some kind of lower high compared to this, and fall apart again, right? I'm not looking out 6 months or 9 months because nobody can see that. I'm just seeing what is going on right now. And to me, this looks more like a bottoming action. I can see the path where price gets above this again because it keeps testing it more often than not compared to prior times. And I can see the path where this breaks this trend line, 200-day flattens out, and all these align bullishly, and we have a rip-roaring bull market in a few weeks from now. The other part is the sentiment piece, where right now everybody's expecting an earnings recession, a regular recession, things to fall apart. People are losing their jobs, right? But Google announced however many thousands of jobs lost. There's been a bunch already. So at least in the tech sector, but they're leaning out. They're actually, not that I want anybody to lose their job, but they're making their companies leaner and better to compete going forward. And that's what's happening. And it started with Twitter and Elon Musk doing it. And everyone else saw what he did. Twitter didn't fall apart. And now they're saying, hey, if Elon did that, we should be doing it with ourselves, with our companies too. And that's what's happening there. So going back to the SPX, everything looks really good on the SPX. Again, are we still in a consolidation phase? Technically, yeah, we are. We're still under declining we're right at a declining 200-day moving average, and this is in force. The point being is that, is this a bottoming action? Again, I could even put a big U and kind of make this, the bottom here, and it's starting to make the right side of a base, right? So let's see if the rest of the charts corroborate with that thesis. Okay, Let's go to weekly. On the week, the SPX was down 0.66. And again, you can see that inverse head and shoulders on the bigger time frame, a little bit easier probably on this weekly chart anyway, right? But down 0.66. RSP was down 1.08. So again, no, we don't like to see that, but it is what it is. Here is RSP though. That's your trend line. RSP is already above the 200-day moving average, already has bullishly aligning short terms, bullishly aligned short-term moving averages. Even underneath this trend, this obviously area right here is super important. And the trend line is right there as well. And so we will see, what that's closer. We'll see what happens going forward, but over the next week or two, same thing. This 200-day will probably start to flatten. There's your 200 right there. As this data comes away and we start to get, take out this data, 2 weeks, prices above a 200-day moving average, you're going to start to see this 200-day start to really flatten out. And then, listen, we could be off to the races at that point. We'll see. Again, we're trying to look 2 weeks into the future, which isn't an easy thing to do. I haven't met anybody that's done it consistently, but that is, I think, a high probability. And that's what we do here, probabilities. All right, so that's the RSP. Looking at Qs. Again, downtrend still in line. 200-day is still up here. So unlike the SPX, it's still looking pretty rough for the 200-day. But on the week, NASDAQ was green. Like, we can't not notice that. NASDAQ was green on the week versus the S&P, which wasn't. So is technology and even the mega cap names starting to come into favor again? That's a possibility, right? That's kind of what we're seeing. And on the week, it was, 0.61 equal weighted Qs were down. Okay. And so that kind of confirms that the mega caps, Amazon, Apple, let's look at Apple on the week. On the week, up 2%, 2.3%. Amazon, oops, I can write. On the week, oh, that was down actually 0.89. Let's see, Google up 7% on the week, right? Facebook up 1.74% on the week. Tesla, I have no idea what Tesla was. Up 9% on the week. So as you can see, the mega caps are roaring back at this point. Now, does it continue? Is it just about? Who knows? Who cares? Point being is that the Qs are up now. Let's look at it. This was, yeah. So every week this year, the Qs have been up. That's something to take notice of, right? That is definitely something to take notice of. And the cap weighted are outperforming the equal weighted. Shows you mega caps are back in style again. And so we'll see if that continues or not, but that's definitely good information right there. IWM. All right, so IWM has been looking pretty darn good. Prices, of course, above the 200-day, came back, retested it, and bounced back nicely on Friday. I love all that. It cleared its downtrend line already. That's a big deal. It has the inverse head and shoulders look over here. That's really nice to see. Small caps being more of a risk on ETF index. So that's a positive to see that it's kind of leading-ish, right? Big volume coming in. Nice, again, there's your inverse head and shoulders. All the moving averages are bunched up. They want to start to align bullishly. This is, the data that's going to be coming off real soon. Again, your 2 weeks, right? If this can make the right side of the shoulder in the same fashion that the SPX, we talked about that one, it could be making a nice base, right side to a base. And again, how far it runs or goes, not the point. my goal in these videos is, are we in a more bullish environment or are we in a more bearish environment? Because we're going to go back and forth this year. There's going to be times I'm going to be like, hey, this is not looking so hot. We're more of a bearish environment. But so far, all the charts are talking about a more bullish environment. And I think we should pay attention if we haven't been already. And again, this is nothing new. I've been kind of talking this way the last few weeks. If you've been, watching my videos, which hopefully you have, you've been, I haven't really changed my tune. Here's IWO. Again, in this long consolidation, there's your bullishly aligning moving averages. There's your data that needs to come off. And you can see how price is going to hopefully be, did the pullback, just like I kind of drew in there. I'm going to just delete these. And now the idea is it ran hard, pulled back, logical spot, and then it breaks out and it helps it kind of build the energy and launch off of these moving averages. At the same time, again, it could take a couple weeks for this to happen. We may have some inside days. Who knows what happens next couple weeks? But as it does do its thing, this data comes off, and this 200-day moving average is now flat or even potentially rising. Right? Or at least curling, right? At least curling. Let's just look at mid caps. Oh, by the way, before we do that, I like to look at the weekly. On the weekly, IWO was down. IWM was down as well, 1.07, but that's okay. We were expecting a pullback coming into this week anyway, after this beautiful run up, right? That was just, it was expected. And then let's look at the mid caps. Mid caps has that kind of complex inverse head and shoulders that I've talked about. A few other charts have it. They were down 1% on the week, but overall doing exactly what they're supposed to be doing. And going back, this data in March is going to be coming off, over the next couple of weeks. And then, all this price will be coming off, and this 200-day is going to start to flatten. And again, price has been above it more times than not since November. Pretty awesome, right? Mid caps are so strong. And that's actually, so why do I look at mid caps? So mid caps are kind of like the sweet spot for growth, right? That's the 2 billion to 100 billion market cap names. And those are the ones that are decent size. They're not probably going out of business, but they have a long runway in front of them. That's why mid caps are so important to me. So that those look really, really good. So on the index level, everything continues to be very constructive. Even if the index was down on the week, it was still a very constructive week because everything held where they had to, and then had a pretty strong Friday. All right, so let's go to the ETFs, starting with XLF. Again, there's that very much similar to the mid caps, inverse head and shoulders complex, and looks like the same exact chart, doesn't it, than to the mid caps. So as this data comes off and we start to get into here, price again has been above the 200-day more times than not. It's starting to flatten. I don't know if you can see it right there. It's actually starting to flatten right there. So the next 2 weeks, we're going to have a flat to curling up 200-day on the XLF. Where else are we seeing a flat to rising 200-day? Not many places. So XLF, definitely very positive for the market as a whole. And there may be some opportunities within XLF itself. But again, that's a different video. But XLF looking very constructive. SMH may be the most important. Price is back above the 200-day. This is the Marchish stuff that's coming off. Right? We'd love to see that. Here's the drew this in weeks ago. Again, you guys, nothing new here, right? This just takes weeks and weeks for some of these patterns to play out. And this is making a nice little right shoulder right here with price above the 200-day, getting the bullish cross, which should happen next week if price holds up. Really, really strong right there. Again, this is a general area, but even if we get up there, let's see what that is. That's in the 8 to 10%, right? 8 to 10% higher. That'd be over the next 2 weeks. And then you have a fully formed bottoming pattern, right? So SMH looking really good. I wish the volume pattern here was maybe a little bit better on Friday, but again, volume is secondary to price. On the week, they're probably down. No, they're up. up 0.69, SMH up 0.69 on the week, and overall just very, very constructive, held where it had to. Again, we're about to get a lot of positive crosses over here. SMH is definitely a strong looking name. So semiconductors, let's see, transports. Transports, there's your trend line. Price broke out of it, pulled back where it had to, held where it had to. That all looks great. On the week, the transports were up 0.43. So again, positive price movement, bottoming action. Again, that's what we want to see in transports. Home builders, we're supposed to have this housing crash. Well, don't tell the home builders because they again has this bottoming area. I'll take this out because it doesn't really matter anymore. Pulled back, right? What we talked about. We talked about this going into supply, expecting a pullback to the moving averages, which it did, and now popping out. Oh, and by the way, 200-day already flat. 200-day already flat, right? This is March back here, right? And as this data comes off, guess what's going to happen in this 200-day? It's going to start to curl up. And then you have very bullishly aligned moving averages. Home builders are going to probably demolish earnings season, is what this says, right? Overall, looks really good. The breakout here is strong. Nothing, everything to like here. So coders and tech people are losing their job, and people that build things and masons and people that frame houses, they're doing well. Roofers doing unbelievably well. That's what it says, right? People that work with their hands doing well. Blue collar doing well. White collar losing their jobs. Just what's going on here. All right, let's go and look at the internals now. So we have indexes showing positive price action movements. We have ETFs, important ETFs showing positive price movement. They were down 2%, by the way, the home builders in the week. Definitely positive price movement, no doubt, holding where it's supposed to. So let's look at the internals, and I'm going to shut off volume and moving average ribbons. And let's look at the internals. VIX. The VIX, you know what? It's still in the 20 range, right? What's not to like in the VIX? Where's my I don't know where the other stuff is. Anyway, it doesn't matter. VIX is holding up really, really nice. Again, trending market. This is more bull market activity. Looking at credit spreads. Credit spreads are tightening, as we can see. You say it's consolidating, but in the end, they're not spiking, right? We're not getting this, which I was very concerned about back here, right? But we're not getting that. And so this idea of lower highs and maybe even a lower low here, right? From here, from here, and even from here, maybe not from there. But again, tightening credit spreads, that's the important thing here. What else do we have? Let's look at, we're seeing the TNX, and again, it's just kind of going sideways, right? Maybe people are going in, bonds are paying good, so maybe people are going to bonds, but more importantly, the DXY, and DXY continues to fall. That's the more important one right there, right now. I think the dollar index, truthfully, is really helping this market. And as long as this is falling, I think the market has some tailwinds going for it, right? And again, which areas of the market? That's tomorrow's video, right? Stocks to watch. Stocks to watch goes over. And I think this plays a big role in what is doing well and has been doing well in the market. So tomorrow I'll be doing all those names. And again, a lot of them will be repeats because we've been in them for a few weeks now, and they're doing very, very well. But dollar is falling, which is the basket of currencies, and it versus the basket of currencies, and that's it's positive, right? Put call ratio. We have right, 1 foot in the door, 1 foot out the door. You have some people most people, I think, are more in the bearish camp. saying that we're about overdue for a recession and so on and so forth. It's going to happen any day now, any second now, whatever. And the market's saying is right now, the market's saying, hold on, we're not sure that's going to happen. So you have the 1 foot in the door, 1 foot out the door. This indecision is the wall of worry of the market visualized, and it's strong right now. So that's positive. That's bullish for the market. If the wall of worry and people don't know which way, there's no extremes going on, that's always going to tend to be bullish. A percent of days, percent of stocks above the 50-day moving average, and you can see at 65%. Again, that's a bull territory breadth indicator, right? Looking really, really good. Even look at the value line geometric index, which I don't always look at anymore on this video, but it held where it had to hold. This is the price of the median stock, right? So it really gives you another breadth type of study, and you could see that it's bottoming out and trying to move higher, right? So again, everything is saying things are okay. Gold, gold on the weekly, man. Like, is gold about to bust out? Again, we were watching it back here in 2020. We watched it back here, earlier this in 2022, about a year ago, and it fell apart. Is this the time? I don't know. Maybe it is, but it's a big pattern, right? It's from 2011, so we're talking about 12 years. It's a big pattern. But gold, dollar falling, gold busting out. Wow, that'd be pretty amazing to see. So zooming in here, you can see how, again, it's had a great run, a little parabolic here, right? So I'd expect a pullback, and then again, where it pulls back to, that's the important thing. All right. And then Bitcoin, US dollar. I like to see the Coinbase one. There you are, Coinbase. There we go. And Bitcoin's ripping, right? So want to see risk on? That's risk on right there. Bitcoin ripping. All right. So, we have literally everything kind of going for us in this market. I haven't seen a bearish chart yet. Bigger picture, right? Some things will be up, some things will be down, but overall, it's a bullish charts up and down, when I think a lot of sentiment is bearish. A lot is waiting for the end of the world, the other shoe to drop, a recession, earnings recession, unemployment. And again, all that may happen. It all may happen, right? But right now, it's not happening, and that's what we're with. We're with the right now. So I think it's again, we should be looking for things to buy at this point. Things that are outperforming, things that are doing better than the rest of the market, because the entire market is not going up at the same rate or at the same speed. And I think that there are some really good ideas out there that we should be part of. Anyway, hope y'all are doing well. Good luck with this. Let me know, put some comments down below. Let me know what you like, what you didn't like about this video, or about the market commentary. And I hope you all have a good week. Check out my stocks to watch tomorrow. It's coming. And again, I think I think we're in a bullish time of the market, right? And January. Oh, by the way, January did well the first week. Did well the first 3 weeks. One more week to go. On the month, the Qs are up 6%. SPX is up, 3.5%. So unless things really fall apart, over the near term, it's going to be a positive January bodes really well for the market. All right, guys, have a good day. Check me out. Subscribe to my Twitter feed, and please subscribe to YouTube. Goodbye.